Welcome to Explain the Charts, where we break down complex market movements into actionable insights. Today, July 22nd, 2025, we're putting the GBPUSD currency pair under the microscope, analyzing the confluence of current events and raw chart data. Recent headlines suggest a strong bullish impulse for GBPUSD, with reports indicating it has trespassed the 1.3500 barrier and is hitting multi-day highs. This positive momentum is largely attributed to a broad sell-off in the US dollar, with some news directly referencing Trump's Powell threat as a contributing factor to USD weakness. However, it's crucial to acknowledge a time lag. While news sources cite the current rate around 1.35264 for today, July 22nd, our detailed candlestick data for analysis concludes on July 21st, showing a closing price of 1.3489. This slight disparity suggests immediate intraday strength that occurred after our latest complete daily candle, reinforcing the news of the 1.35 break. Taking a step back and observing the one-day chart over the past several months, we clearly see a dominant bullish trend for GBPUSD, characterized by a consistent pattern of higher lows and higher highs since the start of 2025. This sustained uptrend reflects an underlying positive sentiment towards the pound or a fundamental weakness in the US dollar on a larger time frame. The overall market structure suggests that dips have generally been bought up by participants, maintaining the upward trajectory. Now let's zone in on the daily chart's critical price levels, focusing on recent months to pinpoint clear support and resistance. The market news hinted at a pullback from highs near 1.3787, and indeed, our data shows a peak around 1.377 on June 26, which has acted as a significant overhead resistance. This level represents a strong supply zone where sellers have historically stepped in, pushing the price lower after reaching these highs. Conversely, the mentioned support at 1.3369 holds significant technical importance. On July 15th, the price dipped to 1.33732 before bouncing, reaffirming this area as a robust demand zone. This level has proven to be a reliable floor, preventing deeper declines and attracting buyers. The 1.3500 level, recently trespassed, according to news, is a pivotal psychological and technical barrier. Historically, it has served as both resistance during upward movements and support during pullbacks, making its current status as a potential support extremely important. Other notable support levels visible on this time frame include the 1.32 to 1.33 range from early May and the 1.28 to 1.29 zone that provided a strong base during March and April 2025. The ability of the price to stay above these levels is crucial for maintaining the broader bullish outlook. Transitioning to the one-hour chart, we gain a more granular view of the recent price dynamics, particularly the pullback mentioned in the news. Looking at the period from July 2nd to July 7th, the chart clearly illustrates a sharp correctional phase for GBPUSD. After reaching peaks around 1.375 early on July 2nd, the pair began a noticeable descent, moving steadily lower to about 1.358 by July 7th. This confirms the narrative of pullback from 1.3787 extends lower and aligns with profit-taking or short-term dollar strength. Many of the red candles during this period are relatively large, and they are often accompanied by higher trading volumes. This suggests that the selling pressure or conviction behind this short-term downward move was substantial. Key intermediate support levels, such as 1.365 and then 1.360, were tested and broken during this decline, indicating that bears had control in this short time frame. The hourly chart, therefore, provides a clearer picture of the immediate reaction to the 1.377 resistance and the subsequent path to finding temporary support. It's a classic example of a healthy correction within a longer-term uptrend, allowing the market to consolidate before potentially resuming its primary direction. Now, for the most recent and detailed price action, let's examine the 15-minute chart, covering July 18th through July 21st. This timeframe reveals a tight and compressed trading range, with GBPUSD largely oscillating between the approximate levels of 1.348 and 1.350. Such narrow consolidation patterns are often indicative of market indecision, where neither buyers nor sellers are able to gain a clear advantage, resulting in a balance of power. Volumes during this period appear relatively consistent, without any pronounced spikes that would suggest a strong accumulation or distribution phase taking place yet. For intraday traders, this presents a classic setup for a potential breakout. A decisive move above the 1.350 resistance, ideally accompanied by a noticeable increase in volume, would signal strong renewed bullish momentum, targeting higher levels. Conversely, a breakdown below the 1.348 support with increased selling volume would suggest further short-term declines. Monitoring these immediate boundaries is crucial, as the direction of the breakout from this tight range could dictate the very short-term trend. To summarize our in-depth analysis and provide a forward-looking perspective, let's return to the one-day chart for a holistic view. The critical price levels we've identified are the major resistance at 1.377, the pivotal 1.350 level, which is currently being tested as support, and the key short-term support at 1.3369. Further down, midterm support is found around 1.28 to 1.29, and a more significant long-term base sits near 1.25. For a bullish outlook, the primary driver remains the ongoing weakness of the US dollar, exacerbated by political factors as reported in the news. If GBPUSD can successfully establish the 1.350 level as firm support, which appears to be happening today according to current market reports, it would pave the way for a retest of 1.36 and potentially the 1.377 highs. The likelihood of revisiting 1.377 if 1.350 holds strong is approximately 65 to 70%, especially if the UK releases favorable economic data, such as strong inflation or GDP figures, reinforcing the Bank of England's policy stance. For a bearish outlook, the recent pullback from 1.377 highlights the potential for exhaustion in the rally, and ongoing bow and treasury clashes could introduce policy uncertainty, weighing on the pound. Should the 1.350 level fail to hold as support, we would anticipate a retest of the crucial 1.3369 support. A decisive break below 1.3369, especially on high volume, could open the door for a deeper correction towards the 1.28 to 1.29 range, which we assign a 35 to 40% likelihood under current market conditions. This bearish scenario would be strongly reinforced by any surprisingly hawkish pivots from the Federal Reserve or significant negative economic data from the UK. In the immediate short term, watch for a clear directional breakout from the tight consolidation range observed on the 15-minute chart between 1.348 and 1.350. Also, keep a close eye on upcoming high-impact economic data releases from both the United Kingdom and the United States, particularly interest rate decisions and employment figures. These macroeconomic events often act as the primary catalysts for significant price movements. Always remember to implement robust risk management strategies and consider both technical and fundamental factors when executing your trades. That wraps up today's comprehensive Explain the Charts analysis on GBPUSD. We hope this has provided you with valuable insights. Don't forget to like, share, and subscribe for more in-depth market breakdowns.